All right, so you can probably hear me okay now. Let's talk about this market. This market, when I was just right before I got on the call, I'm looking at the breadth figures, right? Hold on. All right, so you can probably, I'm looking at the breadth figures, right? And the entire year, the divergence in the market has just been outrageous, right? And we've seen negative divergence in the past. I don't think I've seen it last this long. And I got to say, I mean, this year, considering where the market is at, this is some of the worst action that I've seen in a very long time. Because if the market is down, the market is down, right? When I talk about the market, I'm talking about the S&P 500. But when you have the market pretty much at all-time highs, and the carnage that's going on underneath the surface is outrageous. The guys at home, Joey Retail, who puts on CNBC, all he hears is that the market is near all-time highs, and that's what he's judging the market by. He has no idea what's really going on. When I'm looking at the S&P 500, we're down here in the last couple of days 4.87% from all-time highs. It's not even a lot, right? 4%. Considering the move that we had, 4% is nothing at all. When you look at some of the breadth figures, right, they've been bad for a while. But let's just look at the QQQs, right? The QQQs, again, barely off the highs. This is not a big deal after such a huge move when you're down 5%. The problem is that individual stocks are making, individual stocks feel like the market is down 20 to 25%. So when you look at this market down 5% from all-time highs, currently we have 486 stocks down 25% or more this month in the last 21 days. 486. To put that in perspective, plus 200 is huge, right? And plus 200 down 25% in a matter of a month, plus 200. Let me just go back. If I can go back here to 2018, I believe it was 2018, that fourth quarter, the market had a 20% drawdown in the fourth quarter, if I remember correctly. Let me see if I can get those figures up. To put that in perspective, on 12/24, right? Let's go back to the SPY back on 2018, where that last quarter, the market was down 20%, which was right over here. Market retraces down 20%. To put this numbers in perspective, back then on 12/24, which was the bottom after this 20% move down, we only had 380 stocks down 25% or more for the month. That's with the market down 20%. Right now, with the market off 4% from all-time highs, we have 486 stocks down 25% or more in the last 21 days. With the market at all-time highs, we have 1,666 stocks down 25% or more in the last quarter, with the market at all-time highs. And these breadth figures have been horrible ever since the market of stocks peaked in the middle of February, March. They've been horrible, but it really hasn't mattered. And the reason why is because currently the S&P 500, 26% of the S&P 500 is comprised of 7 stocks: Microsoft, Apple, Amazon, Tesla, Tesla, Google, Facebook, NVIDIA, right? And for the NASDAQ 100, those 7 stocks make 50% of the index. 50% of the index. That's just outrageous. It's outrageous. 50%. So just to put that in perspective, back in 1998, 2000, when we had the 4 horsemen, Cisco, Intel, Microsoft, Oracle, it peaked at 15%. Okay. So again, just for those guys just getting in the room, if you have any questions, just feel free to ask any questions you want. Yeah, there's a question here on YouTube. Could breath be so bad it's close to being good? Yes, absolutely. Right. Breath can be sometimes so bad it's actually a positive. I think what needs to happen now is they need to hit the FANG names. They need to hit them hard. And I think once you hit the FANG names, you'll be able to get a washout. Okay, so for those of you who just entered the room, again, what's going on underneath the surface, the indices are lying to you. What's going on underneath the surface is just outrageous. I've never seen it this bad before, where you have the indices at highs, but yet underneath the surface, it's been a complete disaster. SPY down less than 5% from all-time highs, less than 5% from all-time highs. And we have 486 stocks down 25% or more in the last 21 days. Okay. And as I said a couple of minutes ago, back in 2018, when we had this 20% drawdown, right? We had a 20%, this is roughly a 20% drawdown in the 4th quarter, right before Christmas. The market bottom on 12/24. On 12/24, after a 20% drawdown, stocks down 25% or more for the month, peaked at 380 after a 20% drawdown. We're 4% away from all-time highs, right? And we're at 486. Back then, to put things in perspective, stocks down 25% or more for the quarter. It peaked at 2,102. 2102. That is after a 20% drawdown. Right now, we have 1,666 stocks down 25% or more for the quarter. That's just outrageous, right? We can see that here, right? Look at this. Stocks down 25% or more for the month. And you can see here this entire uptrend, right? You see more red than green. Breath underneath the surface has just been horrible. But, it is what it is. So I think what's going to happen now that the last man standing, or I call them Fat Man, Facebook, Apple, whatever, those 7 names, I think once they get hit, we might get a washout. But for now, those people are at home. Normally when you run a concentrated portfolio, you run the risk of maybe 1 or 2 stocks ruining your entire year, right? Let's say you run a portfolio of only 10 stocks and you're pretty much a long-term investor, and 2 or 3 stocks go down, there goes your year for the most part. I think this year has been the flip side. If you're diversified and you have a basket of stocks, then you probably ran into trouble, right? Because again, most stocks are down for the year. If we go here, right, let's just take a look at some of these numbers. S&P 500 is up 22% for the year. It's down 3.42% from the 52-week high, right? That's the S&P 500. The NASDAQ 100, the QQQs, up 25% for the year, down 3.76% from the highs. The breadth numbers are just horrible. That's just the bottom line. All right, so if we go here, let me just duplicate this little chart here, this little thing. I'm going to duplicate this And let's start looking at, let's just change this to the NASDAQ 100. So now we're looking at the NASDAQ 100, which is down 3% from all-time highs and up 22% for the year. Let's take a look at some of the stocks. What stocks are getting hurt right now? Stocks. All right, so Peloton down 75% from the 52-week high. We have PDD down 70% from 52-week highs. Baidu down 58%. Zoom, I'm looking at this over here. Let me just move this, move left. I mean, so you have right now a total of 37 stocks out of 101 that are down 20% or more from their 52-week high. 37, okay? You have 60 that are down 10% or more from their 52-week high. So you have basically almost every stock so far is down from their 52-week high. Let's take a look at some of the FANG names. Right, these are the ones that are holding up the market. You have Apple down 3% from the highs. Where's Google? Google 6%. Amazon 8%. Nvidia down 9%. That's all pretty much today. See what we have here. All right, lots of 52-week lows. With so many stocks down that much, they can keep the big tech up here and rotate all those stocks that are down a lot and push the market higher. That could definitely happen. I think what's going to happen is that they're finally going to hit the FANG names. That's what I believe. That's exactly what I'm playing, that they're going to hit the FANG names. They're going to hit them hard. And I think once they hit them hard, we might get better action. We might get better action on some of the different names out there. That's my assumption. Okay. When I say hit them hard, I'm talking about, let's hit those FANG names as of today. For the most part, they were still pretty much above their 21-day moving average. So they were holding up pretty well. But when you look at the IWM, this is just taking a tremendous beating here over the last couple of days. This is down 12, 13% in the last 15 days. You take a look at the IWO, the Russell 2000 growth down from 330 all the way down to 284 in a matter of 15 days. That's 14%. Let's take a look at the MDY, down from here, right over here, to down 9% in a matter of 10 days. Let's take a look at ARK, everyone's favorite, right? This is a lesson that needs to be learned for a lot of people. And this happens over and over and over again, right? So here's ARK. ARK from 2018, for the most part, until here, is pretty much flatlining for almost 2 years, right? Then it has this great year. And what happens? Everyone jumps in here. I mean, this happens every single time. If you ever wanted to raise money, anyone out there, if you ever wanted to raise money, all you need is show a good 1-year performance, and you're going to raise all the money in the world, and it's pretty much going to be your top for at least a few months. This happens over and over again. Oh, what'd you do last year? Okay, I was up 50%. Oh, here's all my money. Thinking that you're going to replicate what just happened immediately after. So what happens is that you raise all this money, they raise 50 billion, and now this thing is down 37% from this high over here, with the market up 22%, right? So let's just take a look at ARK from this high over here last couple of weeks, down 21%. Let's take a look at 50, the IBD 50, last couple of weeks, down 13%. What else do we have here? MTUM, down 8%. So I think finally today, we're starting to see some damage that might actually affect the indices. the Qs, the NASDAQ, and the S&P 500. Let's see what else we have here. See if there's any other questions. Was thinking that if the breath was good, recently the S&P would be at 5,800. Percent of New York Stock Exchange stocks above their 10 days at 725. Yes, yes. So again, so when we get these flush, when we get these, these low numbers, right? You tend to, you typically get a bounce. However, there's certain times that 7% will go down to 2%. Just go back to COVID, right? Let's just take a look. You're looking at the New York stock. I'll show you something similar. I'll show you something similar here. Bar charts. I'll show you stocks. All stocks above the 20-day moving average. This is extremely low. It closed at 9% today. This is low. The lowest that we've seen it in 1 year, 2 years, right? So here, the COVID low, we got down to these levels, 8% on March 2nd, right? Which is pretty low. We got all the way down to 1%. So it can get lower. And the indices here, the S&P closed at 269. And then here it got as low as 228. So yes, when we get that low, you typically, you're going to get bounces, but sometimes you get the cascade. And I'm thinking that because we're so oversold and they finally hit the FANG names today, I think they're going to flush them. That's what I believe. They're going to flush them here in the short term. And it's going to make this 898 go a little bit lower. If you go back to, let's go back 5 years to that 2018. If you look right over here, we got down to 10 and the SPY was at 275, right? We ended up going as low as 431, and the S&P was at 247. So here we had a low of 11, 276. Here the SPY went to 247. That's just a SPY, okay? You can just imagine individual stocks. So you have to be aware that sometimes I hate when people say from oversold, we can get more oversold, which is true. I think the difference that what's going on right now with these breadth divergences that we haven't seen that panic. There's been no panic at all. Sometimes you feel it. We haven't had that yet. And I think if they hit the FANG names, I think we'll get them. Small caps rebound first. Who knows? No one knows. No one knows. I mean, it would make sense, right? They're down the most, but no one really knows. What should be our plan? Wait, right? You don't need to anticipate. I'm doing certain things, but I think the average intra-year decline for the S&P 500 is roughly 14.3, 14.8%, right? That's the average intra-year decline. For the QQQs, almost the same thing. So if you have time, right, and time is on your side, then I would consider buying some SPY. If we get lucky enough and we have a 15%, 15% retracement, right? That's roughly from this high, that is roughly imagine that. That's roughly 405, right? Yeah, 405, 410, right? So that's if you have a long-term horizon, then you should consider that. The same thing with the QQQs, the IWM, same exact thing, right? As a long-term holder, if you don't own the IWM, you want to use these steep pullbacks, all right? This one, we're only at, 12%, all right? If we sell off, figure that it might go down 15 to 16%. That's when you're going to want to nibble for the long term. Long term, I mean forever, right? Similar situation with the IWO. And if you go back, right, everyone talks about all-time highs. This stock broke a 52-week high. It's all blue skies. But if you look at the indices, right, just a lot of times it makes a little bit more sense to buy the blood than to wait until they hit an all-time high to buy up here. Because normally after it's made such a significant move, you normally get a pullback. So instead of waiting for this 52-week high and say, oh, it's the all clear now, we don't have any more sellers left. Okay. The people who have profits who bought down here might consider selling up here. Maybe consider down here when we have these steep pullbacks, okay? And the world's coming to an end. So here, this is the IWO, a little bit more aggressive than the SPY. Let's say this goes down 20% from the highs, right? So we're talking about, maybe 260, 260, 264, right? Maybe you want to buy that blood. So that should be the plan. And if you're in the room, my suggestion is that go to that pinned tweet and take a look at and watch the video holding core ETFs as core holding index ETF as core holdings. All right, do you think with some stock down a lot, using the weekly new high to enter is a good approach? Down 3 weeks or more and buy a weekly new high to avoid some fake daily breakout? Well, that's part of that's part of what we do, right? That's down 3 days in a row is part of what we do with the daily candles. And that scan works just the same for the weekly candles. And it's down 3 weeks in a row or more and up through that high, right? Is it a good approach? You're going to have winners and losers. Even with the best approach out there in the world, you're going to have winners and losers. So all you have to do is play out the probabilities. When the market is not doing well, you reduce your size to a minimum. As you start gaining some traction, you start putting more money behind those ideas. But again, I think right now with the market, listen, I think that they're going to hit the FANG names. They're going to hit the FANG names next. All right, so we need a 9-to-1 update at the very least, post any flush. Yeah, I don't know, maybe. Maybe. But the point of the video was that what's going on underneath the surface is just outrageous, right? Based on where the market is, what's happening underneath the surface is just really, at some point, I mean, even throughout the entire September, October, you see me sometimes on Twitter and I'll put something like breath is just, laugh out loud, just ridiculous right now. But it hasn't meant anything because the Qs, those 7 stocks have held up the market. Any other questions? Let's take a look at some of these names. Tesla, still holding up well. Apple, finally gets hit a little bit today from the highs. Amazon, Facebook, Microsoft, Google. Let's say, look at some of the recent favorites. Affirm, RBLX. What else do we have here? What are some of the other names that people have been talking about lately? Let's see how oversold the market is. The T1, the McLaren oscillator, down negative 219.49. This is pretty much, normally when you get down to 200, this is pretty much where the market tends to bottom, right over here. But let's see here. It's pretty oversold. Again, I think because we're so oversold, once they hit the FANG names, this might get down here on a nice gap down, probably close to 300, and then you might have a nice reversal. And I think like what John said here on YouTube, small caps were the first ones to get hit, first in, first out. So this might bounce. I wouldn't say bounce first, but it might bounce the hardest off that initial bounce. You might see some relative strength in the beginning, but eventually, when the market bounces, it's not often where you're going to see the small caps bounce and then the SPY and the QQQs not do anything at all. So I think that once they bounce, I think Big Brother is going to bounce with the small little brothers, at least in the beginning. Right. I got success with the down 3 days in a row, break a previous day high, but after we create. All right. So, right. So once you found success doing something, just continue to do and play out the numbers. All right. So trade them well and be well.